Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from Chartsandmarkets.com gives us an extensive rundown of the major markets. Is there a reaction to the upcoming U.S. election, and what has that done to market volatility? He takes a look at the U.S. and Canadian dollars, gold, copper, and agricultural commodities. He also has a special offer for our listeners. Robert Campbell, publisher of the realestatetiming.com newsletter, reports from San Diego. He tells us why people are fleeing certain jurisdictions in the U.S. like California, Illinois, and New York. He also has some advice for overall success. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from Chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can also find him on Twitter at ChartsByRoss. Welcome back to This Week in Money.
Well, it's good to be back with you, Jim, and boy, did they give us an exciting week this week.
And because we're going into the U.S. election, do you have some kind of special for our listeners?
Well, what we're going to do here, going into and through the election, there invariably are some really good opportunities in the market. And, you know, with the modeling that we do, we like to look for extremes because that's where you get the really good bargains, either items that become very overbought or very oversold. And it's the reversals from there that can make the big money from people. It's, being in the trend is one thing, but catching a good bottom like March can really make your year. So we're going to offer the annual subscription at 25% off, good through the 8th of November. So that takes you through the election and hopefully to the point where we actually know whether it's a Biden or a Trump victory. Depending upon how things go, maybe we'll extend this for an extra week. But for now, November the 8th is what we're looking at as a special for the subscriptions.
Are the markets acting in any particular way going into the election?
Well, yes, they are. And I just love what's happening here. We have talked over the years about the seasonality, the typically getting that break into the fall, and then you get into your best 6 months of the year, which is that November through April stretch. And, most years, that's what you tend to have is the break. Sometimes it gets delayed, but there's invariably that corrective low. Well, we put out a piece earlier this week that people can get when they subscribe, and it shows that when we go back right through the 1970s, and you look at the election years, that I like to look at moving average bands and, look for oversold conditions, etc. So in every single election year, every year but 96, we had a sell-off down to the lower moving average envelope, anywhere from 1 to 4% below a 50-day moving average. You had a break down to there from a window that was from mid-October through mid-November. So that's the first part of the equation we would look for. That has happened this week. We actually are 4% off the high of that moving average for the S&P and for the Dow. The second part of it here, we wanted to see an RSI, that's a relative strength index, that would get down below neutral. So 40 is the number that we're looking at. It's got a scale from 0 to 100. So at 40, it becomes attractive. And as of the last 2 days, that RSI has got down to 30. So now we've got the first part of the equation in place. The next item would be that each one of these lows has been part of the sequential pattern that we look at. This is one of Tom DeMark's pieces of research that he does. So you count on the basis of looking for consecutive days that are below 4 days earlier. The norm is that you look at a 9-day window. What we find on the election years is that once you get to 7 days, that you can start to look for a reversal at that point. And any 2% rally off the low becomes your catalyst point on the upside. Well, we closed off this week with that count at 5. So it's 5 days where we closed below 4 days earlier. So by the time we get to Tuesday on the election, we will hit the 7. So as long as the market stays under pressure through into the election, we've got the pieces that we like to see around a really good tradable low. And as I say, since 1970, the reversal off the bottom, using that, has just produced some great signals. The one in 2016 was the day after the bottom, because all the pieces were in place the day before, and the day after, the reversal was in place, and we know darn well what happened in the ensuing few months after that, let alone what happened in the next couple of years.
What do we have in the commitment of trader numbers?
Well, for the commitment of traders, some of these markets have been in extremes, and what you've seen is that with the action that we've seen in the U.S. dollar, where it's gone down and made this double bottom over the last probably month and a half to 2 months, this second wave down, note test of the lows this about a week ago, ended up having a pretty good rally in some of the commodities. And so if you take a look over into the agricultural side, you got soybeans and corn with the greatest commitment by the speculators since back in 2009, 2010. So you've got to go back quite a while to see these kind of numbers. Cotton is up there as well, not quite as high, but in those growing commodities, cotton, beans, and corn, we also ended up with our upside exhaustion reading. So that's when you've got relative strength just being so strong that all the oscillators that we look at go into an overbought territory. And with that, then the probability of a good hard correction is really in place. So as the dollar turned up this week, it's had an impact on all the commodities. They've reversed back down, and as far as the ag side is concerned, it probably will give back 25 to 38% of the rally that we've had in the last 4 or 5 months. So look for big corrections there, and definitely going to be some opportunities. There are exchange-traded funds, SOYB or CORN or BAL, for those 3 commodities that I've mentioned, and that's the type of thing you might want to be looking at as an opportunity. And when we look at other commodities, we have copper, which is now just in a point where it would try to create a bit of a seasonal low. Its numbers are a little extreme right now. Once again, just like the ag market, you've got high numbers for the speculators, and you've got the other side of the coin with the commercials. So would look for a deeper correction than we've seen in copper so far. I mean, copper has been up at, 320 in this last week and a half. It's back to 306 to finish off the week, but it's probably got more on the downside. And with that, I think some of the mining stocks, your Freeports and Agnicos, they probably are going to have deeper breaks than we've already seen here.
We'll have more with Ross Clark right after this.
Always consult your investment professional before making any investment decision.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Ross Clark. Ross, what's going on with the U.S. dollar?
Well, the dollar index, as I say, has bottomed out here. The first rally was pretty decent, got up to about 95 on the index, then backed off to 93, and now we're starting to rally back again. And on the other side of the coin, the euro, which had a correction from the summer highs, it held at its 20-week moving average and then rallied back just shy of those summer highs in this about a week ago, and it's starting to ease off as the dollar strengthens. And the euro is really, historically, that's a classic pattern for it as it comes off the high. That first correction, the 20-week moving average for support, a failed rally, and then a second leg down. So looking at it right now, if the euro were to take out the lows that we've seen in this last week and a half, then I think you could be looking for pretty significant pressure over there. The Canadian dollar has had a pretty decent bounce off its lows, and I don't think that there's a tremendous amount of upside potential in here. We're bound pretty much in about a 2-cent trading range. If the commodities do have a deeper break, and I think that, when we look over at the ag side, we say probably a little bit of weakness there. And in the energy side of the equation, the oil market still in the midst of its seasonal decline. We've been talking about this one. There's no reason to be looking for a bottom quite yet as far as that one's concerned. So that's still a negative overhang for the Canadian dollar. Speaking of energy, natural gas, here we are at the end of October, and the normal seasonal rally in the nat gas is for a high between mid-October through until mid-November. So we probably got 2.5 to 3 weeks still left in terms of buoyancy in the nat gas market. Then look for a pretty good pullback. If it's a severe winter, then you can get a second rally into January, February. But the norm is that the seasonal high for the winter actually should be in place by the time we get out to that third week of November. So don't be looking for too much more on the upside. I think it's one of the few items that's still in an uptrend, but I think you want to be pretty conservative in terms of looking at that.
The Canadian dollar, any hope for that? It seems to be stuck at 75 cents. Is that a good or bad thing?
Well, as I say, I think it's just stuck here. I mean, clearly there's no guidance, and from a political perspective, there's nothing in terms of guidance. When you take a look at the potential in terms of maybe the U.S. election, if Biden gets in, I really hate to think about the impact that it's going to have for Alberta, and the impact then that we would have on the Canadian dollar. So from a technical perspective, really it's range bound. As to say, if the commodities want to weaken off here with a strong U.S. dollar, maybe we give up a couple of cents on the Canadian dollar, but I just don't see it as a potential opportunity right now. There's some other things that do jump out at us. The stock market is definitely going to be one of the top items there. It was we look at VIX, the volatility in terms of the market, and for some clues, a week ago, the volatility index, VIX, had risen from the low 20s up until about the low 30s, and then settled back, and so it was uptrending, settled back just under 30 a week ago, and during that process, as it settled back and gave back maybe half of the gains, the intermediate term VIX that's the VIXM, it tested its lows. And when you get that divergence where the short-term volatility index is trending up and the intermediate is turning flat, that type of signal is rare. Only got maybe a dozen of them in 20 years. And they invariably set up for the type of reversal this week. So on Sunday, last Sunday, we put out a report saying, if you see this uptick in VIX at this point, market's going to be vulnerable and look for a good trade to the downside. The options, anybody who took the November put options is up 100% from Monday's opening. So that's been a pretty good move. And now that VIX has moved up into the high 30s, we're getting to the point we will be looking for the opposite extreme. The VIX itself is now up high enough to say that we're ready to see a bottom in the market. And what we need to see is the price on the indices like the Dow or the S&P produce an oversold signal. And I'm putting out a piece on the weekend on that one. That has been just a great signal for identifying the turn off a bottom. And we really think that could be one of the big clues and big opportunities in this next 10 days or so.
Over the last few months, copper has really taken off. Why? The friends over the other side of the ocean there, the Chinese, they seem to love the copper market. Invariably, they step in every few years, every 5 or 10 years, and we get a big price move, and they talk about how strong their economy is, and they seem to be the only ones who are wanting to talk up the economy these days. And from $2 to $3 in round numbers from that March low. That's just been a pretty exciting move. Say in terms of the seasonalities, probably look for a small pullback in here. I think you'll find some decent support in the sort of the 285 range. We're at 305 right now, so there's not a lot of vulnerability, but just enough to clean out some of those weaker long, the speculators who are in that marketplace right now. If we've got a COVID problem around the world and things are slowing, it's going to be tough to see how this thing's really going to have as much movement on the upside as we've seen in this last 6 months. But, you take the trades as they appear, and if we can come down and get a decent oversold signal in this next little while, then we'll look to take some money and put it in on the long side. Gold, is it still bright and shiny?
The gold and silver markets are just going through this consolidation phase that really it matches what we saw in 2011, 2006, 1987, when we had those big speculative moves to the upside, and then went through these consolidation phases. And as of this week, we had been looking for gold to test resistance, which was going to be up around 1925 level. And the inability to get through there then set it up to go back down and test the support. So support as we see it is at 1855. This week's low was at 1865. It closed off the week up about $10, $15 from there. So it's had a good test of support. And in terms of the modeling, and we've got all 4 examples here that we do a graphic on, you can see exactly how important this low is right now. And from a seasonal perspective, we really wouldn't be looking for a breakout to the upside until you get through December and into the good seasonal January, February. But as we move from here through the end of the year, if we can manage to push through that 19.25 resistance on the gold market, then I think you can tack on a reasonable amount, still well shy of the highs that we saw back in August. Silver, you probably look at something in the $27 to $28 range as a potential, and considering where we are right now, that would be a pretty good trade. I would be surprised to see them break out at that point. I think that would just be an interim high. And if we could have another sell-off deeper than this one, taking us into December, then I think we'd be looking at a position that would end up as a buy and hold. But at this point, I don't see it as that. I think it's a trading vehicle. Same type of thing when you look over at the miners, the GDX, GDXJ, a pretty tough week early in the week here. A bit of a bounce on Friday with the metals themselves bouncing back. And you could be looking at maybe a retest of that low, but overall, patience as far as the precious metals, I think, is the name of the game right now.
Any reflection in the commodity markets about possible food shortages?
Well, that's been part of that move as far as the grains were concerned, and there's from my looking at the charts, you can see that this type of move that we've had in the beans and corn, this could just be the catalyst, the early stages of a much larger move. I always like to see something that gets overbought on first stage of enthusiasm, and then you look to see just how much it gives back. And if you can get a nice minor oversold reading at a high level after you've had these big runs, then you can be set up for a much larger run. And if this COVID situation does continue as is, and if it's more than something that takes us into the early part of next year, or maybe it's beyond that, that creates possibilities of a decent move there. And if the U.S. dollar index were to break out of this double bottom that it's working on right now, then anything that's priced in U.S. dollars is going to move up in price. And if you look at just this move that we've had in the dollar index in this last week and a half, it tacked on maybe 1 point, so went from 93 to 94. Very small move, but the reaction was significant as far as the commodities were concerned. And so I think that you could be looking at fair volatility when it comes to the ag side of the equation.
Ross, anything else we should be taking a look at right now?
No, I think those are the key items at this point. And, we just say this is the type of a market environment that we really enjoy, because you get opportunities here that come along only a few times a year. And the idea for us is to then put some technicals together that will help identify the extremes and then the turns, which become low-risk entry opportunities, just at the point when everybody's considering them to be high risk and with high volatility. But the name of the game here is to be buying when everybody else is anxious and have reasonable risk controls. And as I say, that's part of why we're putting out this special, and we'll have that through November the 8th, 25% off the annual subscriptions. And if, we'll be realistic on this one. If things haven't resolved from a political perspective in the U.S. by that weekend, we'll look to extend that offer out for another week.
Ross, thank you so much.
Pleasure to be with you, Jim.
My guest has been Ross Clark from ChartsandMarkets.com. You can find him on Twitter at ChartsByRoss. Coming up, Robert Campbell, next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Robert Campbell, author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter online at realestatetiming.com. He's speaking to us from San Diego. Bob, welcome back to This Week in Money.
Pleasure Pleasure to be back. I'm so honored you asked me to speak with you every 2 months.
Bob, can you tell us about the Campbell Real Estate Timing Letter and how people can subscribe?
Yes, I can tell you about it. And the Campbell Real Estate Timing Letter, I started publishing it in 2002, 18 years ago. And it was a product of a book I wrote called Timing the Real Estate Market. And in that book, I show people exactly what key indicators to follow, what statistical devices to use to use on the data so that it produces signals that tell you either it's a good time to buy or it's a good time to sell. And what's interesting about it is that over the course of the last, and I've tested it through almost 40 years now, I think it's 38, and the success rate of the model that uses these 5 key indicators is between 80 and 90%. So it's quite remarkable exactly how accurate it is as far as predicting future trends, and that's why I'm just completely dialed into it with respect to the analysis I do and the forecasts I make. I mean, if you've got something that's 80 to 90% accurate, don't deviate. Don't use your brain, just follow the data. In my timing letter, the Campbell Real Estate Timing Letter, I track 17 major cities in the United States and 6 major cities in California, which is my primary market because California is the biggest state in the United States.
How much damage is the second wave of the COVID-19 narrative doing to the economy?
Well, it's gonna hurt it a lot. That's for sure. And there's this COVID-19 pandemic is about 80% political, Jim, and for a lot of reasons that I'm not exactly sure, but it's not nearly as dangerous as people think it is, but they're certainly making it that way when they're shutting down the economy. 10 times more people are going to get hurt economically that ever die from this virus.
Are the markets likely to predict the winner of the presidential election November 3rd?
Usually it's the economy. And so that's a key figure. So I think this is really you can't count on the economy anymore because the economy is really is doing rather poorly in retrospect, because of the COVID-19 thing. But I think President Trump's going to win.
Have home sales picked up in California and the rest of the U.S.?
Absolutely. Last month, I mean, it slowed down a little in the current month, which is September. However, back in August, year-over-year home sales were almost up 24% year-over-year. I don't think it got that good during the real estate bubble from 2002 through 2006. So it's been amazing that how strong the real estate market has become. It's super red hot, Jim.
What's selling and what isn't?
High end is selling the best, low end is selling the worst, and it seems like if I had to come up with a reason to explain that is the only people where it's really hot is people that have existing homes. Let's say like here in California, I think the median priced home is like $650,000. Well, a lot of these people, $650,000, that they can sell their $650,000 home, and they probably have $300,000 equity in it, let's say, and they can put that $300,000 equity down on a $800,000 house, and so it's a lower loan to value, and it's easier to qualify for a loan because lending standards have tightened up over the course of the last 6 months.
Are any of the U.S. housing markets flashing a buy sign?
Well, yeah, they're all flashing a buy sign with these 2 exceptions: City of San Francisco and Detroit, according to my metrics. And I only follow major markets. I mean, you have to have at least like 2 million people in your market before I'm going to follow you because, it takes a large sample size, to run the numbers and come out with significant conclusions. But I just got a sell signal on Detroit, which was the first, in the U.S. sell signal I've had in a while, And San Francisco, I got a sell signal in San Francisco back in September 2018, and it's still on the sell mode. And interestingly, since I got that sell signal in San Francisco, the median price, using median price houses, San Francisco real estate's gone up 3% during that period of time. However, the rest of the country, including California, so other major spots in California, housing prices are up at least 3 times that much. So I continue to think that, when the fat lady ultimately sings, San Francisco is going to be ground zero for the correction. And of course, what's happening to rents in San Francisco. Rents in San Francisco have collapsed in the last year. 2-bedroom, 1-bedroom apartments, we're talking about apartment rents now, they're down over 20% year over year. And the latest statistics I read for studio apartments, they were down over 30% year over year. So the rental market in San Francisco it's probably as bad as any in the country, possibly with the exception of New York, which is bad, but they're fleeing out of that city, and the rental market is just collapsing. People are leaving California, Jim. They're leaving. They're leaving California. They're leaving New York. They're leaving Illinois. All of these super socialist states.
Well, we hear celebrities like Joe Rogan has left California. Gene Simmons is leaving. What are you hearing about the people who are leaving California and why?
Well, the reason they're leaving is they don't want to pay these exorbitant taxes. They don't want to be controlled so much in a socialistic economy, in a socialist government. I mean, California income taxes right now are 13.3%, the highest in the country. They're thinking about bumping them up to 16.3, 3 percentage points higher. I mean, pretty soon people start paying more in state income taxes than federal income taxes. And just the whole thing that's going on. I mean, California is super expensive, and they're super liberal. And a lot of these guys are just, the conservative guys are just saying, no, I'm not going to pay the price. I'm not going to pay the price for free health care for illegals, for free this, for free that, and all this other crazy stuff. I'm just going to move out. And it's the same in the state of, in the city, in New York City. They're leaving. So, I mean, and this used to be a rumor. It's not a rumor anymore. The out-migration, there's a net out-migration out of major cities in California and in New York, and in Illinois to other places where the taxes are lower. In other words, as Margaret Thatcher famously said, socialism works great until you run out of other people's money.
Are people holding back on listing their homes and buying homes due to the COVID-19 fear?
That seems to be the case because, and that's really an excellent question, because the supply of homes on the market is at a all-time record low. I mean, I think it's below 3. I think it's in the mid-2s or something. It's never that low. So, I mean, so that's one of the reasons that prices are getting bumped up so much. It's because of low supply. But on the other hand, I mean, we still have like 2 or 3 million people that are in forbearance on their mortgages, where they're not having to make mortgage payments until at least the end of this year, of 2020. However, the government programs like FHA and VA, which are about 20% of the mortgage market, they've extended that forbearance program for another 12 months. So you think they know something that everybody else doesn't know? So I mean, how long we can keep living in an economy that's essentially on Fed and government life support is anybody's guess.
We'll have more with Robert Campbell when This Week in Money returns.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Robert Campbell. Robert, are areas of the U.S. in a housing bubble?
I would say there's a lot of areas in the United States that are in the housing bubble. And, first on the list, I would probably put Denver in that. I would put Dallas in that category. California's in that category for sure. California is the most boom-bust, cyclical real estate market in the country and has been for the last 50 years. But those are the first ones to come to mind. And I mentioned Denver, I mentioned Dallas, because they're Midwestern cities. Midwestern cities normally don't have the upward price movement that they have during this real estate boom. However, now that that they've gone up that much, and so I'm strictly reliant on the bubble statistics. You go back in history and you say, okay, the best way to predict the future is to study history. Do prices normally spike upwards like this in the Midwest cities like Denver and Dallas? No, they've never done that. So all of a sudden they've done that this time. And so that's why I think the correction in those two cities, could be a lot more extreme than the U.S. as a whole.
In housing bubbles and the bursting of housing bubbles, is it the value of the land or the land and structure that increases and decreases?
It's the land. The improvements don't change that much. The value of the improvements usually go up and down with with inflation, but it's the land it's the land that always gets overvalued. That's where the best investment you'll ever make is to buy vacant land when prices are highly depressed, and then sell vacant land when prices are highly overvalued. The price movement in land is always the greatest. And also, and behind land comes condominiums. When the condominiums get more depressed during the bust and more elevated during the booms. So at the bottom of a cycle, the best deals are to buy a condominium and then ride the cycle higher, and then at the peak when all the indicators are flashing sell your condo. You'll make more money doing that than you will with a detached single family home.
Interest rates have dropped during the COVID-19 panic. Are people continuing to refinance debts and spend that extra money in the economy?
It seems that they are. I mean, that consumer spending seems to be holding its own. However, I mean, if you look at the U.S. savings rate right now, Jim, it's at 16%. That's jumped like almost 10% since this COVID thing started. So a lot of people are saving money too.
Well, there aren't any trips to spend your money on.
Exactly. Excellent point. You're going to get on an airplane and fly someplace and then do what?
Quarantine for 14 days.
That's not a vacation. That's like going to jail for 14 days.
I was going to say that's usually your first prison sentence for drunk driving, 14 days.
Your first introduction to the jail.
Rising interest rates are kryptonite to the real estate market. Do you see any concerns ahead for the mortgage market?
Well, as long as they keep going lower and lower and lower, it's going to suck in a lot of people that shouldn't be buying. And when this thing's reverse, and they will reverse, and start going up at some point in time, the people that all of a sudden bought a home, let's say let's use California values. Let's say they bought the average price home in California for $650,000 based on a 3% 30-year fixed mortgage rate. Okay, let's just say interest rates double, go back to 6%, which isn't even the historical average going back 50 years. It's probably closer to 8%, but just let's use 6%. And everything else just kind of changes normally. I mean, interest rates double, but incomes don't, and all of a sudden you're going to find that $650,000 house, if you want to sell it, within the first, year, 2 or 3 of interest rates going up like that, you're probably going to get $450,000 for it. So yes, interest rates do have a key effect, and that's in fact why it is one of my 5 key indicators that I use to track real estate trends and to predict when to buy and when to sell.
Is mortgage lending by the banks more liberal or more conservative than usual?
more conservative. It's really become more conservative. In fact, the banks were just advised or required to increase the reserves 2 or 3 months ago, Jim, because they know what's coming. They know what's coming. These banks. See, the last time all the banks had to get bailed out like crazy, because they're underwater. Now they're trying to forestall this a little bit. They see this coming. They said, we want you to double your reserves. So whatever the reserves were a year ago, reserves for bad loans, they're double today what they were a year ago.
Is the increase in money supply likely to show up in gold prices and also for silver?
No, not so much the increase in money supply. Because that'll come later. What drives the price of gold and silver is primarily two things. One, it's distrust of the government, and number two, it's an inflationary bout. And inflationary bouts are not driven by money supply; they're driven by consumer psychology. Because as you see, they've been pumping up the money supply, for the last 10 years, but we still don't have any inflation. So all of a sudden, if they keep going on the road they're going, and all of a sudden we see inflation, at least what the government reports at 2%, which is a total laugh. But let's say it bumped up to 3% or 4%, and all of a sudden started climbing to 5%, which happens during inflation. And all of a sudden people get the idea, they go, my God, inflation is, and this is the psychological element here, my God, it's things are going to be more expensive in the future than they are, today, so I better get rid of my money and buy now as opposed to buying later. That increases the velocity of money, and with that psychology, the more money turns over, if you have more and more money bidding for a limited number of goods, then inflation does go up, and that certainly affects gold and silver.
We're hearing predictions of a rally in the U.S. dollar and also hearing predictions of a rally in gold and silver. Your thoughts?
I think for the next 5 years, gold and silver are going to be the best investments, the best investments to be made. The U.S. dollar, I thought the U.S. dollar would rally. I'm not so sure of that anymore because it certainly hasn't done that. Somebody I follow very closely that you guys, that's also on you guys' show, is Martin Armstrong. And he's one of the smartest guys around. He keeps saying the U.S. dollar is going to go up, 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 but it just hasn't happened. And I think what's more likely to happen is that gold and silver are going to go up, up, up. And I base that not just as a wild guess or wishful, hopeful thinking. It's because if anybody was to go back and look at the Dow versus the gold ratio going back, let's say, take it back to, 100 and over 100 years, you'll see that it is very, very cyclical. I mean, the cycles are extremely well-defined, and when the stock market's going up, gold tends to go down. When the stock market's going down, gold tends to go up. And back in, the last major turning point was back in 2012, when the gold to silver ratio had a major turn, and at that point that was the bottom of the stock market, and it coincidentally was the top of the gold market. It wasn't that turn, but gold went up to $1,900, then it fell all the way to 1,000. So where the cycles are right now with the Dow to silver, the Dow to gold ratio, it made a turn back in September 2018. And you can clearly see this wasn't a blip. I mean, that ratio's been steadily going down, where gold has almost outperformed the stock market, and maybe has even outperformed the stock market a little bit during the last 5 years, or since that period of time. So until that situation changes, gold is going to continue to outperform the Dow. Then what you want to do is you want to watch that ratio, and then all of a sudden, and then when there's a major turning point again, this isn't something that's going to happen in a week or a month. It's going to happen over the course of a year or 6 months or a year. Then you want to sell your gold and move the money back into U.S. equities, the U.S. stock market. But I think gold and silver have the tailwind behind them, and for what reasons? Who knows? But the markets know, those cycles know that the collective, the collective wisdom of investors has put their money more on gold right now than they have on the U.S. stock market.
We'll have more with Robert Campbell when This Week in Money returns.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Robert Campbell. Robert, could COVID-19 cause a 2008-style banking collapse?
I doubt it. I have a feeling this COVID-19 thing that, could start dissolving about 30 days after the presidential election. But I don't. The only way it could cause that kind of collapse is this, and it's especially bad in Europe right now. They're having riots in Europe right now. In Germany, they're bringing out the military to control the people, control the protests. They're doing the same in Italy. They haven't done that in the U.S. yet, but there's a lot of strange things happening right now where a lot of smart people, not just conspiracy theorists, think that this is all a big pre-planned thing, where it's a one government world or something that's going to take over control of everything, and this is kind of a test just to see if the people will follow orders like good sheep. And so far they have, but there's a lot of resistance out there. There's a lot of resistance out there, Jim. You don't know when this thing could boil over and people just say, no, I'm not going in my home. I'm not going to my home. And all it takes is like 30 or 40% of all the people to take that stand, and you have a revolution on your hands. So don't discount the fact that, revolutions have been repealed. That can happen. And people are going crazy being locked up like this. And there's a lot of people who are just saying, no, I'm not going to do it.
Sure, look at the American Revolution. Only 10% of the population took part on the American side.
See, I didn't know it was, but it doesn't, it takes, that's interesting. It takes a smaller percentage than you think. I was just reading Martin Armstrong, and he said 30 or 40% based on the American and the French revolutions. So all it takes is a small amount of people, all of a sudden to say, nope, we're not going to do this, and we're going to stand up. Because you're certainly not getting the politicians, at least here in the United States or in Canada, that are standing up for the people. They'll never do that. It's just the people themselves are just going to stand up and say, nope, I'm not going to do it. I'm not going to do it. And they go, well, we're going to shoot you, or we're going to quarantine you in a camp if you won't wear a mask. And they say, no, you're not, and you'll fight back. And somebody will see you fighting back, and other people will fight back. And now you have a full-blown revolution on your hands.
Is there a push on in the U.S. towards socialism and communism?
Yep. That's the road they want to take us on. Complete control. And it's because all the people that have the most money, they want to keep the money, keep their money and make even more. It's like $5 billion isn't enough. They want $20 billion.
Is there an attitude, I call it, eat the rich?
Eat the rich?
Yeah. Anarchists really like to say things like that.
No, but that's a good start, because most of these rich guys, didn't get their money fair and square. Like guys like, Rockefeller that discovered oil, or Steve Jobs, who invented a computer and an iPhone, and guys like that. Most of these guys are financial scammers, Jim.
What do you think of the idea of a guaranteed annual income?
I think that there's at least a 50-50 chance that it's coming to that. It's going to come to that because I think these lockdowns are going to leave the small businesses that, 20-30% at least of all small businesses in the United States, which constitutes 70% of the employment base, are going to be permanently out of business. So what are all these people going to do that are permanently out of jobs? I think the government's going to start instituting programs where they start paying them all, $2,000, $2,500 a month, which includes free health care. So all these guys are going to end up making, $30,000 to $35,000 a year without working. And to take it a step further, what these guys are going to do, nobody's going to sit around and not work. They're all going to have side hustles that they work for cash. And these guys that are unemployed with side hustles are going to be making more money than people that are fully employed, and they're going to take jobs away from them. That's my theory. Well, you put government in charge of anything. What do you expect, Jim?
Is the U.S. likely to see more violence and unrest following the election, and how could that affect the economy?
I believe so. Because what I keep asking myself right now is, how can the U.S. survive as a country when 1/2 of all Americans hate the other half? And whoever wins this election, the other half isn't going to accept it, Jim. They're not. I mean, I just believe that we are heading toward revolutionary times. And I think that there's a good chance that I was even talking with Tom Allen the other day, and one of your provinces up in Canada wants to secede from Canada and become a state in the U.S., right? I think that's just a tip of the iceberg. Everybody's fed up, as if the grass is, as I told Tom, I go, that's kind of like jumping from the frying pan into the fire, isn't it? And he goes, you don't know how bad it is up here, Bob. So you don't know, but everybody's looking for a better way, where you could start seeing states secede, collectively states secede from the Union and become their own country, like California, Oregon, and Washington. I mean, those are the three super socialistic states. They could all form a country and break away from the U.S., and it would just be a socialist paradise where nobody works, everybody gets free college, health care. It'd be wonderful. And that's the direction we're going, Jim, sadly. Thank God I am like 73 years old, healthy and fit, have led a great life, have, a business I love, no complaints, comfortable financially. But I'd sure hate to be a young person starting out today and try to get themselves in my position, 50 years later.
Are food shortages likely this winter?
Well, I know the price of wheat has gone way up, and I don't know about these supply chains and things like that. But if tensions keep getting worse between, U.S. and China, U.S. and Europe, and even the supply chains in the United States, sure, we could have shortages based on the fact that it's going to be harder to transport materials from one area to the next. And commodities, I think commodities are a great long-term investment too. Second to gold and silver, I would be long a commodity index. Wheat, silver, any kind of commodity. Oil, corn, pork bellies, you name it. Hard commodities, I think, are going to do really well. Are going to outperform the stock market. They're going to outperform the bond market. That's where I've got my money. Even though I still own real estate, I still have a nice house. I mean, everybody needs a place to live. I'm not going to sell my house. But as far as going out and saying, is this a good time, for example, in California with rents down across the board between 10, 20, and 30% to buy income property? No, I don't think it's a good time at all. I think it's a horrible time. And they've got things on the ballot here where they're making it even more restrictive and more difficult for landlords to raise rents and evict tenants. Who needs that? That's what they do in socialism. The government takes over, takes control. They know what's best. They know what's best for business and the economy. And so they put a stop to that kind of stuff. And pretty soon, all of a sudden that you can't raise rents. Prices go up. I mean, the cost of living goes up. You can't raise your rent. A tenant quits paying rent. You can't evict them. That's a horrible situation to be in. But that's, California's looking out for those kind of people. Here in California, I think that we're the epicenter of the victim society. I'm a victim. So let's protect all the victims.
Are a large number of people still on temporary government assistance in the U.S.?
Yes, they are. A lot more. I mean, and I don't believe that the reports the government puts out, what they are, but there are still a huge number of unemployed people. And that's what's different about this bailout than the last bailout during the 08-09 crisis. During the 08-09 crisis, who got bailed out first in line was the banks. Who's getting bailed? This time, the system has become so fragile, now they're having to bail out people, workers, employees, people that were unemployed, that were making, $2,000 a month, working, and now all of a sudden they're making, $2,400, $3,000 a month on enhanced unemployment benefits. They're making more money now than they were when they were employed. And that's what makes me frightful that, you know what, that people like the Fed, everybody said, oh, this recovery is coming along fine, where the Fed chairman, Jerome Powell, was saying, you need a huge stimulus program to keep the economy rolling. At least another $3 trillion. Well, those two don't jive together. You can't have a nice recovery, and the chairman of the Federal Reserve says you need to pump another $3 trillion in the economy, or we're going to be in deep doo-doo. So I think it's worse than most people think it is.
Are all the states likely to get back to normal anytime soon?
Nope. It's going to take a long time. I would say 10 years. This is a scary transition. What's going to happen? A lot of unemployed people. That's why I think that monthly income going out to permanently unemployed people is probably a likelihood. What else are these people going to do? And interestingly, in the United States right now, kids between the ages of 20 and 30 years old, who are the hardest hit because they have the low-paying restaurant jobs, hotel jobs, bar jobs, leisure industry jobs, that the 52% of those kids have now moved back home, Jim. That's the highest number since the 1930s, since they started covering it. These kids can't make a living. They're all back home. I mean, you and I are guys, and all of a sudden, when you were like 25 or 30 years old, would you live at home? I wouldn't have lived home in a million years. When I moved away to college, that was it, right? We all went to college, went out and got a job, rented a room with a friend or rented a one-bedroom apartment, and we could all financially take care of ourselves and survive and even do well. Today's kids can't do that. Hey, here in San Diego, a one-bedroom apartment costs $1,700 a month. Most of these kids that are working in restaurants and hotels and bars and things like that, that's about what they're making. They're making about $2,000 a month. And that's before taxes. So you take taxes out of it, they're probably down to 14. They can't even cover the rent. So they're moving home.
Bob, do you have any health tips for us?
Oh yeah. As many times I've been on this show, I always like to tell you that health, guys, should be your number one investment. And it's always been my number one investment for the last 50 years. My goal is to be the healthiest and youngest looking 73-year-old in Southern California. And the people that know me go, you already are. But you never give up. You got to take care of your health. It's the most important asset that you have. Being in poor health, and let's say you're 65 years old and rich, but you're in poor health. You know how much money you'd give up to be in good health? All of it. And as far as, taking care of business, here's what you have to do, especially guys. I'm more in tune to you guys because I'm not a woman. They have totally different things going on, like, they go through menopause and hormones, which is horrible. We don't go through that. What's nice about men, all you guys, if you take care of yourself, you can look better at age 60 than you did at 30. Think about that. But you got to take care of yourself. So what you have to do to take care of yourself, you have to lift weights, and you have to have a good diet. Keeping your weight down is 80 to 90% diet. You can lift weights and be the strongest friggin' person in the world, but if you don't keep your eat the right foods and avoid the wrong foods, you'll just be a big, huge, strong man. Will you be overweight? Absolutely. And so here's what I do. I mean, I work out like a maniac because that's my addiction. I mean, it's a good addiction. It's not like drugs or alcohol or gambling. But so I work out an average of about 2 hours a day. I eat right. I fast between 14 and 16 hours a day, a minimum of 3 to 4 times a week. And I run hills to stay in shape. I won't go back to the gym yet because you still got to wear a mask in the gym. And I've had an annual gym membership for 26 years. So, I'm all into taking care of business. So you do those things, and you can be in great health. And the great health, when you're in great health, it gives you great energy, and it gives you great confidence. People can see it. It makes all aspects of your life better. And before we end up on this note, I want to tell you one thing I learned that I don't think I've ever shared with you guys before is that the way to a successful and happy life, and I stole this line from Natalie Wood, who was a Hollywood actress, which is a tough business. And one time I had a reporter talk to her and said, Natalie, how have you remained so upbeat and so successful over the course of all these years in Hollywood. She goes, here's how I do it. Here's my motto. I keep a smile on my face, and I keep walking forward. Don't let anything get you down, guys. We're all going to have down days, but don't let it get you down. Just keep moving forward. Deal with it. Keep moving forward. Stay healthy. Watch your business. You know, nothing's static anymore. You got to move money. You got to move money into rising trends and into rising trends and out of falling trends. And you do all those things, and you can live a magnificent life. And being super happy and comfortable in your living, it's not about money. I mean, let's just say you can't be poor, that's for sure. But let's just say you've got a couple $1,000,000 bucks. You can be perfectly happy with a couple $1,000,000 bucks, assuming you love what you do, the people that you're good at what you do, that that you have a woman in your life that you love dearly, and that if you're good at what you do and you love what you do, you're going to make a good income. You don't need to be making $1 million a year to be happy. In fact, most people that are making $1 million a year are unhappy because all it does is draw attention and lawsuits to them. But the key is the foundation should be health, guys, health and fitness. Take care of your body. And the easiest way to take care of your body is you got to start young, and it's got to be a habit. The friends that know me, they go, Bob, you know what differentiates you from everybody else? And I say, no. They go, you show up every day. They go, you're not in here lifting big heavy weights, but you show up every day, and it shows. Look at you. You're in great shape. He goes, you're in better shape than, you're in your 70s, and you're in better shape than most guys are in their 40s. You've got a flat stomach, you're strong, and all that stuff, but you just got to keep showing up. And my motto's always been, if I miss a day, that's fine, but never miss 2 days in a row. That's where the consistency comes in. And so you just do little things like that, and pretty soon, all of a sudden, you got a magnificent life. You got a magnificent life. One of my good buddies, he tries to stay in shape. He's about 30 pounds overweight. He still lifts weights, and he's strong. He's about 10 years younger than me. And he goes, Bob, you work out hard, almost harder than anybody I know. I mean, for somebody your age. He said, why do you do it? And I said, because more chicks look at me. And he laughed, and he goes, I'm married. That doesn't matter to me. And I looked at him straight in the eye, and I said, so am I, Bruce, but it does matter to me. And everybody I've told that to, they go, exactly. That's a gene in all men have. So, I mean, you got to do stuff like that, and it's hard. It's hard, but it's worth it. And I finally figured this stuff out after, did I know this when I was 35 years old? No. I didn't have to do anything when I was 35 years old. I did sit-ups, ran 4 miles a day, did 50 push-ups, and I played sports, and I was in great shape. But now you got to go way, way beyond that. Plus, you've got to do things that to stay young. And what I'm doing right now, I was always good at baseball. So I'm joining with a buddy of mine that's an ex-college baseball player. He's 14 years younger than me. So we're about the same level. He's in good shape and everything. So we're going to join in an over 65 baseball league. Fast pitch, hardball. You know what that does for your self-confidence, guys? It makes you feel young, like you still got it. You got to do little things like that. You always got to be pushing it. You can't let age catch up with you. But when you let age catch up with you, you die. You don't let yourself die. I want to go out like a shooting star. All of a sudden I'm there, magnificent one day, then I'm gone. I know that's a lot. You guys. I'm more passionate about that than I am on real estate. And I love real estate. I've made most of my money in real estate. I'm good at real estate. I was born on a building site with a skill saw in my hand. So do I know about real estate? Yes. And I love it. But health should always come first. And if you do all these little things, little of this, little of this, little of this, and you do it over the course of a lifetime, you're going to have a magnificent life, you guys. So that's my final message to you guys. The golden rule of investing is to buy low and sell high, but the golden rule of life is take care of your health.
Mine is never give up, never surrender.
Oh, that too. Oh, my God. Absolutely, my friend.
Thank you, Galaxy Quest.
I mean, look, because and it's just like all it is. I mean, you can have setbacks and things like that, but all of a sudden you just got to keep moving forward. Keep moving forward. So there's a guy in the United States, Jim. Do you know the name Jack LaLanne?
Sure do, Mr. Workout.
He had six-pack abs at 85. That's my goal. That's a good goal. You know how many other guys in the world have six-pack abs at 85 besides Jack LaLanne? 0. But if he can do it, anybody can do it, right? So that's it. It's all about health, you know. I certainly want to be healthy and have energy to, you know, to talk and stay ahead of the trends like you and I do, and have the private conversations that you and I do. You know, being old and tired is no way to live. We always got to be looking for that, you know, somebody offers us a ride in a Spitfire or P-51. We want to go, yes, when do you want me to show up? Not, oh, I can't do that. I've got these medical injuries. My back's hurting, blah, blah, blah. No. When we meeting and when we doing it?
Besides, flying inverted might be good for your back.
Yeah, that probably helps a little. Oh, I know. When I used to fly, I tell you one thing. I used to go up in the air. One of my favorite things to do was just, you know, roll the airplane over inverted and just fly. And look, when you look up, you're looking at the ground. I always got a kick out of that.
Robert, how can people find out more about your newsletter and your book?
They can go to realestatetiming.com. It's just like it sounds, everybody. realestatetiming.com. No dots or dashes. You can buy my book. I've sold over 31,000 copies from my website. It's a magnificent book. Just go read the reviews on Amazon. And or you can get a free book if you subscribe to my timing letter, and it's only $135 a year, so it's really not anything, and you know, not that much money. But it's and that's what I do. And if you subscribe to what I'm doing, I guarantee you'll be farther ahead of the trends than 95% of all people. And that's what it's all about, you know. If there's a train coming down the track, don't you want to know about it sooner rather than later?
Robert, thank you so much for being on This Week in Money.
Always a pleasure, Jim. We'll talk again soon. Bye.
My guest has been Robert Campbell, author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter. He was speaking to us from San Diego. You can find him online at realestatetiming.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Robert Campbell, and thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Jim, I always look forward to the podcast.
Larry, I hope there wasn't any thing scary or Halloweenish in your latest news release.
No, it was actually a very positive news release. We talked about spinning out our high-grade gold and copper and our rare earth assets into a new company, and we're going to launch it on the high-grade gold and copper. So we engaged a geological team to do that, and we just beat their property visit because they have to have boots on the ground to do that, and we just beat that by maybe 4 to 6 days before the snow flew up there. And so we were actually very fortunate in doing that, and we just received and announced the NI 43-101 technical report. And you have to have this if you're going to be doing a IPO or a spin-out, and it's got to be current and up to date. And this one here is a very thick document. Some of the best compilations that I've seen. And so I'm happy with the report, and it talks about a small program initially and then going on to about $5 million expenditures in the following 2 years. So we're preparing for that, and everybody's wondering what this contains. Well, it contains several targets that require drilling, and some more work, some more surface work before you set the drills up. That's the first program. And we will have drills on the property, resulting from that. But this is a very pregnant property. It's got lots of showings along about a 10-kilometer strike. And somewhere in there, I do believe there's a major ore body. And that's just my thoughts as I qualify that. I've liked this property for over 20 years. It was initially, I had it staked and paid for it, and then I sold it to the company for my cost about a year later. And so I'm looking forward to finally getting up there. We haven't had a good gold market for, quite a few years. I mean, it's just in the last 6 months, just about the time that COVID-19 really shut everything down, that a lot of interest in gold reoccurred. It went up to 2,000. It's below 1,900. It's around 1,870 or something like that. But that's a natural. It went up quite a bit over the last few months, and so it's pulling back. And let's face it, the election is bringing a lot of uncertainty and volatility to the market. So people are having a wait-and-see attitude to see who's going to run the ship, who's going to pilot the ship in the U.S., and, I'm certainly pulling for a party, but I'm not going to discuss that. It's, I think either party it's in. They've been talking the green machine and criticality, and I think that will continue. Regardless who the president is, we're certainly happy with the support we're getting from the U.S. government, especially from the DOD. They basically have are going to qualify us by finally getting us some work on the Rocher, on the Manganese project. And the stockpile, for instance, they need EMM, so we're going to put our best foot forward. We did do a couple small tests way back in 2013 when we first started talking to them. We went out and took some samples, random, and it didn't seem like we had any problem with our process for recovering manganese out of very low grades. And that stockpile, by the way, is a little less than 400,000 tons, and I don't know how many tons a year they'll need. That will be brought up further down the line. But we want to prepare to be able to do that. And the stockpile, by the way, a lot of it came from the Tillery Peak area, if not the majority, and that's something that we can move forward with. So the next steps, of course, is we're going to have a shareholder meeting and vote on this, which we hope we can get done here so shortly. We're trying to connect that with our audited financials so that we're not doing the same work over twice and adding extra cost. So that'll be the next step. As you'll see, a shareholders meeting will be called. Of course, we'll have meetings behind the screen with the bureaucracies. And I have to tell you, I've done a lot of IPOs and everything like that, but this is the first time I've ever done a spin-out. And since we announced that, I see, about 20 other companies are looking at doing spin-outs, so it's become popular. And but that's the only way you can maximize the assets. I mean, right now our gold and rare earth assets are hidden behind the recycling project, and so we don't get any joy on the share price when the gold goes up. When gold goes up, we don't get any sunshine from that. So it's an exciting period. It's certainly a period of change, and I'm hoping the change isn't going to be very great, so people can get back and start feeling a little solid about after the COVID-19 and the bounce back in the market. And now the Dow's down over 2,400 points or something like that from its highs. It's it's scary territory, but it's not new. The same with gold. Gold's gone down, but that's the history of gold. It goes up rapidly, goes down rapidly, and but I can only see with the coming inflation that gold's going to be the biggest hit out there on the market, and I'm really happy that we have this recycling opportunity, because that has really put us in the front, and people have to realize that currently I have to find out when the next work starts on the or finishes on the pilot plant, and I know everybody's impatient about that, but the best thing is to make sure your I's are dotted and your T's are crossed, and the devil's always in the details. And you got to remember that there's no cookie cutter to do this. The most I can equate it to is mining, and that's my background. So I feel that we've done the right steps, we're doing the right steps, and we will optimize this thing here as soon as the market gets jubilant about it. So Jim, that's kind of what I had to say. I'm looking forward to the weekend. We've had some very busy days in here with 10-hour days and over the last 2 weeks. And so there we go.
Larry, for people new to American Manganese, what's the company all about?
American Manganese is a critical metals company, and it developed a process in the United States for one of the largest deposits in the U.S., but it's very low grade. It between 2 and 4, say 3%, and the U.S. Bureau spent 60 years trying to optimize that and bring it together economically. They couldn't. We went to Cameco. They come up with a solution, and that solution is the cornerstone of our recycling. And so you can find anything you want, Jim, on our website, AmericanManganeseInc.com. If you want to talk to me or anybody in this office, you can phone 778-574-4444. If you want to look up the stock, it's traded on the Toronto Venture Exchange under the symbol AMY. It's traded in U.S. under symbol AMYZF, and it's traded in Frankfurt under the symbol 2AM. But I think we can look forward to an exciting 2021, everybody.
Larry, thank you so much for the update, and have a great Halloween.
You too, Jim. I'm getting dressed up and going out.
My guest has been Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on October 30th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.